Starknet is one of the top performers this week. The question is why? Who's buying here? Who's selling here? What's driving this rally? Is this just short-term manipulation, or is there actually usage of the technology? We are going to look at the on-chain data, the data most people are not considering. The price went absolutely bonkers. In less than 2 weeks, it increased by 128%. Now, once we zoom out a little bit and we look at the relative valuation to Ethereum, the chart looks very different, as in we still have our recent rally, but long-term, Starknet tended to do much worse than Ethereum. The top was in shortly after launch, and over the course of a bit over half a year, Starknet underperformed by roughly 90%. Now, where does that underperformance come from? Now, the answer lies yet again in tokenomics, as in there's new tokens that hit the market, insiders and early investors cash out, and if the demand doesn't grow as quickly as the supply, the price has to come down. Yet, the recent rally is fueling quite a bit of attention. Starknet is the second most viewed cryptocurrency on CoinGecko in the last 24 hours. And so there are two potential explanations for the price rally. The first one is that this is just a short squeeze, that enough people were betting on falling prices of Starknet because Starknet tended to underperform Ethereum and because also supply is increasing. Starknet's supply went from 719 million to now 2.5 billion, and that's just over the course of a few months. That's then what created the underperformance, and that then incentivizes market makers to potentially push up the price to induce a short squeeze. Now, the second potential explanation for the rally is not market manipulation, it's actual usage of the blockchain. Now, here's the data. This is the TVL, or total value locked, of Starknet over time. Since July, we have tripled in TVL, and that's in US dollars. Now, measured in STRK, so in Starknet tokens, the growth tended to be a bit more consistent up until the recent price increase. Here's the stablecoin market cap over time, that's close to all-time highs. And while the decentralized exchange trading volume isn't necessarily at all-time highs, it tends to come in waves. Measured in STRK, it is. So in other words, the blockchain does see more and more usage over time. It sees more and more stable coins. It also sees more and more swaps on chain. So the argument that this rally is just entirely a short squeeze because so many people were betting on falling prices can only be half true, because again, we do see the technology growing. Now, here's the big question. Is the unlock schedule still too aggressive going forward? Because it undoubtedly was in the past, right? More than a 3xing of supply in 1.5 years. But relative to the current amount that's already circulating, the growth isn't as steep anymore. Now, let's have a look at a few on-chain metrics. Starknet has a ported version of the token on the Ethereum chain. And over here, we've got more than 30,000 holders. The number of buyers and sellers per day on-chain tends to go up, so there is growth. By the way, if this is not your very first time watching this channel, then feel free to subscribe over here. I publish videos regularly, and when you're subscribed, YouTube is more likely to recommend the videos of this channel again. But it's not just trading activity, getting in and out of the token, that's growing. There's also a growing investor base. Because while there are 30,000 holders in total on chain, but once we apply a filter to that number and we look at this over time, we see an interesting development. On the left side, we see the number of wallets that have at least 5,000 Starknet tokens. At the current price, that's roughly $1,000 worth of the token. We can see how the number of retail investors is growing quite consistently. In the middle, it's 50,000 tokens. So that's $10,000 worth of Starknet. That's also growing. On the right side, it's $100,000 worth of Starknet. So here we do see a bit of profit taking with the recent rally. Also, relatively speaking, the number of whale investors isn't growing as quickly anymore compared to the number of retail investors. So this is a retail-driven rally. Short term though, we do have to look at leverage, especially in the perpetual futures, so the levered bets on the price. Now, there is a big impact of perpetual futures on the spot price. We have seen this on the 10th of October, where many altcoins crashed temporarily by 70, 80, 90%. That was just unwinding of leverage through the perpetual futures. And we did see that crash on the 10th of October in Starknet as well. Now, in the last 24 hours, we had 122 million worth of trading volume on the spot market. Compare this with the perpetual futures. Here we had 454 million worth of trading volume. So there's more trading volume on the perps than on spot. The 10th of October saw a lot of liquidation, so the funding rate for Starknet turned negative as well. The long side had been completely wiped out, and so the funding rate stayed negative up until the 8th of November. Suddenly funding rates got positive again, yet the price wasn't that high yet. So something fundamentally shifted over here on the perpetual futures market. The average investor wasn't that bearish anymore, despite the highly inflating tokenomics. Here's that flash crash, the 10th of October, the number of liquidations. It wiped out all the longs, and that's why only the pessimists survived. And so more pessimists than optimists leads to a negative funding rate. The shorts have to pay the longs to bet on falling prices. Again, that then switched suddenly. So the open interest on Starknet is at an all-time high. It's close to 200 million. And the trading volume on the perpetual futures market is high as well. There seems to be something very fundamentally changing with the asset. Most altcoins still have negative funding rates, but the adoption on-chain is growing, and it seems like the whales on the perpetual futures market are also getting in, and they might know something that most people don't. The tokenomics might not be as bad anymore, relatively speaking, and maybe it's a bad idea to enter this short. It seems like the obvious bet. It seems like Starknet has to deflate from here. It has rallied to a similar degree in the past. Those lines are all perfectly parallel. But really, I think it's better to bet on falling prices of altcoins that do not have that much attention right now. When there's a lot of attention, prices can go extremely high. We have seen this with the Zcash rally, which also had a very comparable long-term chart. Very few people expected us to see a market cap of 11 billion in ZEC. And Starknet is still below 1 billion of market cap. And those kinds of rallies can bring us easily to 2, 3, maybe 4 billion. So $1 in Starknet is definitely possible. The speculation is increasing, the open interest is going up. And I think despite this very nice looking chart, it's very dangerous to now bet on a deflation of this rally. The saying goes, the trend is your friend. And the long-term negative trend of Starknet has broken, and we might see this rally accelerating further, especially versus Bitcoin and Ethereum. If it's your first time here, feel free to subscribe. I publish videos regularly. Feel free to also check out the premium membership that's down below, thebitcoinstrader.com. There should also be a link popping up on the screen right now on the right side that leads you to premium. I share my own trades regularly on this channel. I also share how I see market diversification, portfolio management long term. So feel free to check it out at thebitcoinstrader.com. See you next time on YouTube or see you in premium. Cheers.